Welcome back to Fast Market, everyone. Kevin Hinks and Nick Theodorakis here for our LikeFolio segment. I'd like to now bring in the co-founder of LikeFolio.com, Mr. Landon Swan, to the show. He's going to talk about a stock that got a little beat up after the holidays, and that is FedEx. Landon, we love to talk about FedEx and UPS in the same segment. We're going to trade them both. You're going to talk about them both. FedEx dropped a bit after their last earnings. Do you have any change in this story based on the LikeFolio data?
Yeah, I tell you what, last quarter we were, if you guys know our earnings score, negative 100 to positive 100. We were negative 40 going into FedEx, so we were pretty pleased with the report. Big drop off in December there, and the stock's been, mostly sideways since then. We've only got basically a month worth of data since then. The score has moved to negative 25, so it's improved, if you will, but we're still pretty bearish on it. A lot of it has to do with just our data, frankly. I mean, the mentions are down about 23% on a year-over-year basis. Happiness has dropped 9 points down to 54%. And it's not looking great. I mean, you can see here the chart. The blue is the 90-day moving average of mentions, people talking about Federal Express. And, again, about 46% of those mentions are negative. I mean, people are very frustrated with late packages, lost or damaged packages. I mean, it's just, they have a lot of problems. And so when we look at even web data, for example, FedEx is down about 6 points while UPS is flat, or actually up. It's up 0.1, up 1%, excuse me. So they've got, it's a clear for us that UPS is the better company right now. They're better, not bigger. And I think that kind of encapsulates their strategy. They've got, there's a lot of headlines right now with USPS and how that's going to affect the FedEx Express service. Obviously, that's going to be bad for them as well. The only positive is that the 2023 holiday sales were up overall about 5% just for the U.S. economy. So more packages should be shipped than last year. I think a lot of that's already priced in, but people are buying more electronics, apparel, toys, and furniture. Those are the main categories that people are purchasing. But everything that we've got is just not impressed with FedEx, all of our data, even with the sell-off. So, that sell-off is going to make us less bearish because it's a lower price. But the data that we have hasn't really moved that much. Plus, you've got some negative headlines. So for us, FedEx is still one to stay away from, or maybe even play to the downside.
And it's interesting because I had a post office experience recently that I was just joking with Kev about. That it's just if you need something on time, it feels like FedEx still is the way to go. But it's fascinating to see your data just kind of that slow trend lower. Do you have any comparison of kind of the non-traditional shippers? Like, how does Amazon's shipping element play into that? Because there's so many other companies doing their own logistics now and moving away from those two traditional ones. That play into sort of that happiness score at all?
We like to look at FedEx versus UPS, and they're actually both pretty close when it comes to happiness. Amazon, it's more difficult for us to break apart Amazon shipping. I mean, the data's there, but they've got so many other business units, and it's such a small part that it's really more about volume than happiness. And so we haven't, everyone's always afraid when Amazon comes into your business, how's that going to affect things? And of course it did, and it will. But no, I don't have any tremendous insights given Amazon's data. I will say that people are more and more frustrated with shipping just in general. The bar is sort of rising. It used to be, if you can get it to me and within 2 weeks, I'll be happy. Then it's 1 week, and now it's 2 days, and it better be here by 3 p.m. Expectations are continuing to rise and rise and rise. And that's a good thing for the consumer. But of course, those happiness scores are going down. So people and businesses are always shopping for a better way to get their goods to their customers.
Landon, is there a part of this that FedEx can still be an effective stock to trade? Like I say all the time, at some point I want to be long every stock, at some point I want to be short it. If they cut costs, they're buying back $1 billion of stock, they announced at their last earnings, even though they did lower the full year revenue forecast. Part of it because of that United Postal Service dispute that you're talking about, that's also being renegotiated. Is there any light at the end of the tunnel here? At some point, will it get cheap enough to nibble at?
Of course, yeah, I love your theory. I mean, I completely subscribe to that theory. And for me, it's testing the lows right now. I mean, I got to see low 200s, 210, 215, and then I might consider it. Our system does a pretty good job of balancing the price and expectations along with consumer sentiment data, web data, app usage, all of that trend data. And what we've got right now is an overall picture of still just slightly overpriced, despite the drop from 280 down to 247. You guys can see on your screen right now. We were bearish going into that. We still think there's a little bit more room. If you get down into under 230, we're probably going to turn neutral, and you get into low 200s, we might flip bullish, assuming the data kind of stays the same. That's the caveat. We're always watching where that data moves.
Landon Swan, co-founder of LikeFolio.com. We always appreciate you coming on and giving us the LikeFolio data. It's a market mover. It always has been, always will. Thanks for coming on, Landon.
Thanks, Landon.
Thanks, Kevin. Thank you, Nick. Take care.
All right, Nick. When we look at a stock like this, this is a name